Hey everybody, it's Pete. Good morning. It is Friday morning, July 17th, 2020. Welcome to a new episode of today's best stock picks. And I think one thing we want to discuss right out of the gate is it's very clear to those of us that are in the market every day, there is a sector rotation going on. The NASDAQ stocks, the tech stocks that carried the market for the better part of the bounce off of the March lows is clearly not seeing the same vicious buying that we saw, where pretty much every dip was just such an obvious buy. Any pause was just an obvious buy. You'd get these 5 or 10 or even more $25 moves in your favor intraday, and you're able to make your entire month on just one of those trades following through. Which, by the way, if you'd like to trade together for 30 days, make sure you click down and learn more about the bootcamp. If you find this channel helpful, absolutely please click subscribe, because we're actually coming out with a new series of videos, and I actually think it'd be kind of cool for you to get the updates. So again, how does this sector rotation affect what you're trading? That's the single biggest thing that is confusing people based on the emails and the feedback that I'm getting. And it really comes down to what was a period of time where you could just size up into these positions, and whatever you felt was aggressive for you, you were kind of comfortable seeing a signal and it would move in your favor pretty quickly. And it would just be a matter of managing that winning trade. We're not seeing that now. We're seeing the same signals fail. We're seeing a lot of breakouts fail. We're seeing a lot of stocks show initial strength, pull back, and be at the lows at 10:30, 11 o'clock. And then you're kind of like, what am I supposed to do here? The stock that was flying off my fingertips for profitable bullish trades is now making me pull my hair out. Well, there's two things to do. Number one is you could still trade those stocks long. You could still be a buyer of those stocks, but you need to adjust how you manage those positions, which we kind of talked about a little bit yesterday, which means that you need to work your orders. But even better, which is the smarter trade, which means when you recognize this, you now become a tape reader and you're really starting to say, something changed. I still like the direction, but something changed, which means now I, as a trader, have to do one of two things: stick with these stocks that made money for me for 3 or 4 months and be pig-headed, or find trades that are actually performing better right now in this particular tape. And that's the difference between a chart reader, a tape reader, and ultimately a trader, which is what you aspire to be if you're watching these videos. Is every day while we're in the market, we journal, we keep a tracking list of stocks that this is going to be on the list for tomorrow. These stocks aren't performing the same. You start trading a little less aggressively on those stocks. Stocks like FSLY and SE and a few of those. They're still in bullish uptrends, but clearly the picture has changed. And it's funny, the easiest way to tell that, am I making money anymore? How hard was it to make money? Is it much more challenging now? Is it easier? Right now, it's tougher in those stocks. Even some of the market leaders, Facebook, which was a clear long over 240, is now kind of chopping around, and it's very challenging to trade intraday. We're kind of on the pandemic window right now, where the shift is pulling out of technology stocks and even what we might call the stay-at-home stocks, the Wayfairs and those kind of stocks. Still clearly longer-term bullish trend. I'm not talking about investing, but we're starting to see what we might call the what's the opposite of stay-at-home stocks? The get-outside stocks, home builder stocks, Home Depot. That kind of stuff is actually now starting to see some taking off. And actually, Home Depot and Lowe's at or near all-time highs right now. So we're going to head over to the charts. We're going to take a look at the market. If you're trading nothing but index futures right now, I feel sorry for you. It's been a choppy mess. But that's the beauty of trading stocks. That is why we are Stock Trading Pro and watching stocks. You can make sector rotation shifts like that, and the market itself could be choppy and light volume. But when we pay attention, read the tape, and understand what to be in, we understand how to manage our positions. But more importantly, if we're in the right stocks because we're reading the tape and building that argument for a great trade, what we're going to cover now is some other opportunities that are better for now. One thing we're obviously going to talk about very briefly is Netflix, which got hit yesterday. We talked about it in the trading room yesterday, and a lot of people were asking me between 3 and 4 o'clock, should I have options into Netflix earnings? Should I hold my positions into Netflix? And we basically analyzed the chart and said that it's been up almost $100 over the last 10 days, I think it was. We'll take a look. Has pulled back a little bit, and it looked like it was priced in already. And again, this is the stay-at-home bullish run that the stock had, and it seemed the stock market is apparently believing that we're going in a different direction, which is higher, and the shift in stocks to those outside stocks. Whatever you believe about the truth about the pandemic, the market is reading it as we're getting ready to do something. So let's see what goes on in the charts here, and let's take a look at some ideas. And we have some good ones. So we'll actually start out with Netflix. And you can see here clearly, it's actually trading down $37 right now. So this is essentially what we talked about. We kind of felt like, personally, I wasn't holding it into the earnings because it felt like it was priced in already. I didn't want to get hit if my analysis on that was correct. Guidance came out. Again, staying with that thesis about outdoor versus indoor stocks, this is clearly seeing the surge off of the March lows because of all the new subscriptions of everybody binging and being in the house all the day, very similar to Zoom, right? So we stayed out of it. Now, here's the thing. If you're an active day trader, have your line in the sand, have whatever level you watch as a tape reader, and the stock is going to be active today. It should be something you can be in there with a reasonable amount of activity, maybe even some size if it's obvious. But you need to know how to read the tape to be involved in that. You might be able to trade it on both sides of the market, long and short. I don't recommend doing that. I'd recommend saying this is the bias of the order flow today. This is the tape today, and then trade the heck out of it because it should have really good volume today. The trade that we're really focusing on today, which was called out in the room, I believe by Rand yesterday, which was a really good call out. You can see that space. We actually looked at it, I want to say around here in May, where it finally cleared the level and just couldn't clear it again. And we might want to even go a little bit higher here with the level. And you see it. What's interesting to me now is we had selling here, but it did not go down. Then we had a big volume candle again, not quite energy because I want to see it get out of this range, but yesterday's candle was a little bit more energy, and we actually finally cleared the range. Now, what's super interesting about this is the next level is 28, and then we're looking up at 38. So this stock has room to go. So what's the trade today? What's the swing trade? What's something that you might be able to consider hanging on to this stock? Well, it needs to stay above 21. As long as it's above 21, it does not close below 21 on the daily chart. The first level we're looking for is 28 and then 38. Other stuff going on in the news. I don't really see any major earnings today other than maybe State Street. We do have consumer sentiment at 10 o'clock today. For the home builders, we're going to take a look at Lennar, which is a stock that, again, this day right here, it broke out, but we said, watch this. It's showing relative strength to the rest of the market and its sector, and hopefully you got a nice head start on that trade as well. Toll Brothers finally catching up and actually showing a little strength, although not clearing the same levels like Lennar did. They have housing starts and building permits at 8:30 today. Depending on how that number goes, if you're already in it, you might be getting a really good boost off of that. We'll see, especially if that thesis about the home or let's call them outside stocks, holds. You can see that Home Depot actually is at or near all-time highs as well, and so is Lowe's. So we're going to keep an eye on these for a potential trade to the long side. And again, with that same idea, FedEx actually had a really nice volume, punched through this resistance at 164. It's got some much bigger resistance up here around the 178, 180 level. That's $14 away, and then we're looking at a run at 200. So it's going to be interesting. I love this bullish gap, which was earnings and actually stayed there. Now we need to see if we can clear these levels. NVAX, again, keeping with the theme of the pandemic type stocks, just an unbelievably good job by those of you in the community yesterday. Probably paid for your annual membership in there, just in the trades in the morning, where we had some really super clean entries. The afternoon got a little squirrely. We were thinking about holding it in the afternoon, but didn't close where we wanted it to. But just an amazing, amazing trade in the morning. Two of them, actually, two really good entries, and still in our list. I did not carry it overnight. It didn't close where I wanted it to. Same thing with Penn. Absolutely still a long. Is it a swing trade long? I don't like it swing trading long as much. I'd like to see another trade like this. This was the swing trade long. If you subscribe to the channel, you'll know we said on this gap higher and it paused, get a better spot to manage risk, get a better spot for the next swing trade, and we got it 95 to 120. I'm still looking to trade the stock long. I'm not looking to initiate a new long. I'm looking for something like this again. Okay, CWH. Congratulations to everybody who's messaged me that I've been watching the videos. Watch this level that it finally cleared. Got through 29, sitting through 29. Now you're sitting on a comfortable swing trade. We're looking for follow through here as well. An interesting one that has pulled back that I like. Let me see the GSX. I'm sorry, I lost track of my lost track. This is actually a pretty nice pullback. Now, what's interesting is we had a nice push and a pause. a push and a pause, and then a pullback. This is something now, the trade here that I'm looking for, best case scenario is we open flat and hold and we're above the open the whole day looking for a trend day. Worst case scenario, but still bullish, would be a test of this 2-day low, which looks like it's right around 73. Is it 73? Yeah, right around 73. So if we get it pushed lower, that would be the level. I won't be spooked by the fact that it's trading lower. 73 would be the bid. Let me just confirm that number. The low for yesterday, yeah, 72.85. So looking around, so 2 trades today in this stock, looking, and it's a swing trade, looking for a 73 bid. I keep going back to that. Looking for a 73 bid, and you got to work that order versus if it opens above yesterday's close, which it looks like it's going to, and stays above the opening price, you can be a little bit more aggressive because it's doing what we want it to do. Last but not least, I'm going to talk about Twitter. A lot of people asking me about Twitter. I know William pops in there every day. The problem with Twitter right now is that it's well, the good part is that it's holding up and looks like it's going to bounce. The problem is the upside potential is not really massive. So you don't want to be taking trades with 1-to-1 risk reward ratio. If you have to risk $2 to make $2, that makes you a break-even trader over the long run. I think we could find a better idea than this particular stock. I just want to talk about Facebook again. 240 has been the level, and ironically, it's sitting at 240 again pre-market. Look, I like it long over 240. It's had all these false starts. It's giving me more gray hair than I'd like. If it's above 240 and we see intraday activity, I'm going to buy it again as long as it's above that level. But again, here's the key. I'm not just blindly buying it above this level looking for a new swing trade. I need to see conviction intraday where we're meeting certain criteria. That's the big difference between just reading the charts and actually trading. So above that level, we like it. A couple of stocks that have turned around and are not as strong as they were. DocuSign clearly meets that criteria. Zoom clearly meets that criteria. FSLY clearly meets that criteria. These stocks are still long. They're just not longs with the same aggression level in your conviction. You can still trade them long. You can still work the order. I just think that we have some easier opportunities today that we should be focusing on. So let's have a great day. Let's trade with discipline. If you like these videos, please subscribe. If you want to trade with me in real time, definitely learn about the boot camp. Scroll down and learn about that too. Have a great day. Have a safe weekend and have a nice weekend. Take care, everybody.